Hi everyone, welcome to today's live analysis session brought to you by IC Markets. Right, before we start today's webinar, let's take a quick look at the disclaimer. Right, so take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. So take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive to the chart and trading view, let's take a look at what's up on the calendar for this week, right? We've got quite a few things going on, but I just want to bring your attention towards the flash CPI figures out of the EU. That's on Tuesday, 1st of October, and also its labor market week in the US. So we've got a combination of JOLTS jobs openings, ADP employment report, as well as the BLS report as well, which will showcase us the non-farm payrolls and the unemployment rate as well. That's out on Friday, of course, 4th of October. Right, so here's the calendar for this week. As I mentioned, there's quite a few other things going on as well. We've also got we also had manufacturing and services PMI reports out of China earlier this morning. We have ECB President Christine Lagarde speaking later today, and Federal Reserve Chairman Jerome Powell participating in the discussion as well. We've also got retail sales out of Australia tomorrow, flash CPI data out of the EU, ISM manufacturing PMI tomorrow along with JOLTS job openings, and we've also have ISM services PMI on Thursday. Right, and also of course on Wednesday we have the ADP employment report, and finally on Friday we've got non-farm payrolls and the unemployment rate as well. Right, taking a slightly closer look at inflation in the EU, right? So we can see here on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized readings, and we can see here that since September of last year, inflationary pressures in the EU have dissipated quite strongly, right? We can see in September for headline CPI, it was standing at 4.3% year over year, and it's dropped down to as low as 2.2% in August. Similar story for the core reading as well. It was as high as about 4.5% at an annualized basis in September of last year, dropping to as low as 2.8% in August. Now, looking at the forecast or the estimate for September, right? We can see that both headline CPI and core CPI are both expected to moderate lower, right? Headline CPI is expected to ease from 2.2% down to 1.9% on an annualized basis, while the core reading is expected to edge marginally lower from 2.8% down to 2.7%, right? So should we see inflation, should we see the flash CPI results come in line with this forecast, or perhaps come in even lower than the respective forecast, we can expect the euro to come under some selling pressures as well. Remember, slower price increases is definitely going to nudge the ECB towards another rate cut that's going to take place on 17th of October. So 17th of October, in about 2.5 weeks, is when the ECB has its monetary policy meeting, and it's quite likely they're going to move ahead with their second rate cut of this year. So we can expect the euro to come under some selling pressures today as well. Tomorrow as well, should we see inflationary pressures continue to dissipate in the EU. Now, on Wednesday, we've got the ADP employment report as well, right? Job growth has significantly slowed down since March of this year, right? You can see the trend is clearly to the downside. And not only has the pace of job growth slowed down, right? We're also seeing job creation over the last 2 months come in well below its 12-month average of 143,000. So currently the 12-month average for ADP job growth stands at 143,000, and quite clearly we can see figures for July and August coming in well below, right? So in August, only 99,000 workers were added to private payrolls. This was the lowest figure since January 2021. And in addition, we've also saw July's figures revised lower as well, right? They were revised lower down to 111,000. Right, so the job market's downward drift has brought us slower than normal hiring after 2 years of outside growth. And we can see here the forecast for September points to job gains of about 124,000, right? That it signals a little uptick in job creation for the month of September, but it still stands well below the 12-month average of 143,000. Now, of course, if we do get a result that's going to be higher than the forecast of 124,000, this could potentially function as a near-term bullish catalyst for the dollar. Conversely, right, if we see ADP figures miss the estimate once more, right, and if we see further downward revision for prior months, right, that's going to cause the dollar to come under significant selling pressures as well. And finally, we've got the BLS employment report up on Friday, right? That's the Bureau of Labor Statistics, where they will release the latest update on non-farm payrolls and the unemployment rate. Now, similar story in with regards to non-farm payrolls as well. We can see that payrolls growth has slowed down significantly since March of this year, and over the last 3 months, not only have job gains been coming in under the 12-month average of 196,000, right? We've also seen a lot of significant downward revision to prior months as well, right? So we saw July being revised lower to 89,000. This was revised down by 25,000 to 89,000. And we've also seen June's figures revised lower by 61,000 down to about 120,000 as well. So we're seeing significant downward revision to prior months data, and we are seeing job creation slow down quite significantly as well. And on the accompanying that is we're seeing a very steady increase in the unemployment rate since March as well. Remember, back in March, unemployment rate was only at 3.8% and is hit as high as 4.3% in July. Now, although it eased slightly to 4.2% in August, right, and we're also expecting September's estimate to come in at 4.2%. Take note that this has still is still at an elevated figure, right? Unemployment rate is still at an elevated figure, and should it be accompanied by lower job growth as highlighted by the non-farm payrolls as well as the ADP employment report, it raises some serious concerns on the state of the labor market in the US. So take note, if we do see non-farm payrolls miss its estimate of 144,000, and should the unemployment rate unexpectedly edge higher, that's very likely going to function as a significant bearish catalyst for the US dollar, right? Conversely, if we see a stronger than expected jobs report, of course, that's quite likely going to function or provide strong tailwinds for the US dollar as well. All right. Hi, Ajay. Good to see you as well. So with that, now let's start the analysis. Or let's move on over to TradingView and start the analysis on the dollar index, of course. So we'll start with the dollar index, move on over to gold, take a look at crude oil as well, touch on the indices, and of course, we'll take a look at any of your requests as well. So if you have any requests for any of the currency pairs, commodities, or the indices, do drop your request in the chat box early, and I'll be more than happy to go through the analysis with you. Right, but of course, let's start off with the dollar index and look at gold, and then after that, we'll move on accordingly to your requests, or we'll just look at the indices and the other currency pairs as well. All right. So you can see here the dollar index is currently trading today at around 100.26. We can see that it's been in a significant downtrend since the end of June of this year, right? Combination uh, of cooler inflation, right? We've seen CPI and PPI both trend lower. We've also seen job growth slow down significantly as well, and combine that with the Fed's first rate cut in September, right, and expected rate cuts in November and December as well. We've seen the dollar sell off significantly, putting huge downward pressure on the dollar index. Now, the dollar index had broken what was a very significant swing low support, right? Previously, this was a very significant swing low support that had taken place at the end of December of 2023. Right, it was first broken on at the end of August, but the dollar index recovered to retrace higher, and then this level was tested once more from 16th of September till last week, and it looks like it has finally broken under this support level very convincingly, right? So this was a previously a very strong support zone for the dollar index between around 100.60 and 100.85, and as of last week, the dollar index has looked to have broken down significantly below this level here. Now, with this swing low support finally giving way, whereas the next major support, right, and that's quite likely going to be at this swing low here that occurred in mid-July of 2023, right? When you look at the market structure for the dollar index here, you can see a very significant swing low taking place, and this is where the next support level is going to be identified. Now, this support level here is a swing low support at 99.74, which is going to be identified as our pivot, right? So take note with uh, the dollar bears in full force, the dollar index is quite likely going to slide lower this week, right, towards the pivot level here. So if you're short on the dollar index, you can use the pivot level here as a potential take profit target for any short trades that you may have, and combine that with potentially weaker jobs data this week, right? We may really see the dollar index slide even lower by the end of Friday as well, right? Especially, right, if we see both ADP and non-farm payrolls come in weaker than expected, these are both going to function as significant bearish catalysts for the dollar, and we may see further downside action for the dollar index by the end of Friday. Right, so take note, the dollar index has just broken through a very significant support level at around 100.80 and 100.60, and it looks to be sliding down towards this pivot level here at 99.74, which is a significant swing low support that has occurred in mid-July of 2023. So if you're short on the dollar index, you can identify a potential take profit target at around this pivot level of 99.74. Now, beyond this swing low that occurred in mid-July of 2023, where could be the next possible support level? For that, we're going to have to zoom out quite all the way back to March of 2022. And when I look at the market structure here in back of March of 2022, right, I see a pretty decent resistance level at around 99.22 that was in place from 7th of March till the 30th of March. So this level here previously functioned as a strong resistance barrier, right? This level here at 99.29 previously functioned as a strong resistance barrier, and now after price breaking above it, this level can now potentially function as a support. So we are identifying 99.29 as the first major support for the dollar index. Right, take note the pivot is also a major support level as well. So we're expecting dollar index to drift down towards the pivot level here, and this pivot can then be used as a potential take profit target as well, should you be short on the dollar index. Now, what about resistance, right? Looking at resistance here, we have to zoom in, and you can see here, since uh, 5th of September, this level at 101.05 has functioned as a pretty decent overlap resistance as well, right? You can see here previously this level functioned as support at the beginning of September, and after which it proceeded to function as resistance from 17th of September till now. So this creates a nice overlap level at 101.05, which we can use in the identification of the first resistance here. Right, so these are the key levels for the dollar index here, and it's quite likely this index is going to slide lower towards the pivot level at 99.74, which is a swing low resistance that has taken place in mid-July of 2023, and you can identify a pretty a suitable take profit target, a potential take profit target for any short dollar trades that you may have here. Right, so we're expecting dollar index to slide down lower towards this pivot level here and perhaps stabilize and maybe stage a little rebound, right? That all depends on how the ADP and non-farm payrolls data come in, right? So it depends, right? So if we do see further slowdown in job creation, then we will even see this pivot level being taken out, and we could even see the dollar index slide even lower. Now, we can also see, of course, it continues to trade underneath the bearish Ichimoku cloud. Remember, when the cloud is red in color, it highlights strong bearish momentum, and this index continues to trade in a strong downtrend and at the same time trade underneath the cloud itself. Now, I believe we can also probably draw a pretty decent bearish channel as well. I think there may be a nice case for a pretty decent bearish channel. Right, there we go. Right, you can see a few touches to the top and a couple of touches to the bottom here as well. Right, not the best bearish channel, I must admit, but it's still a pretty good channel to identify for the dollar index. Right, so take note, these are the key levels for the dollar index. We're expecting it to slide lower this week, especially if ADP and non-farm payrolls come in weaker than expected. Drop towards the pivot at 99.74 should not be ruled out, as it is a strong swing low support that had that was taken place that had occurred on mid-July of 2023. So this is a nice potential take profit target that you can identify should you be short on the dollar index. Right, so these are the key levels for the dollar index, and of course if the dollar index is sliding lower, this is very likely going to function as strong tailwinds for gold prices as well, right? XAU USD has climbed very strongly, right? Making a new intraday high on Thursday, 26th of September at around $2,685.57, right? This is a new intraday high that was formed last Thursday. Right, so very clearly this is the first major resistance area for the for spot gold prices, and with gold pulling back today, right? We're going to be let's try and identify a nice support level, right? When I look across this level here at around $2,531, right? This level previously functioned as resistance from 20th of August till 11th of September. So this is a resistance level here, which now could potentially function as support. So this is actually a nice pullback support level at $2,531.72, which we're using in the identification as the pivot. Right, so see it's a strong support level here, and should gold pull all the way back towards the pivot here, I think we can expect it to stage another nice rebound and to extend the uptrend as well. Right, we can see not only does it continue to trade in a strong uptrend since October of 2023, we also see this precious metal trading above the bullish Ichimoku cloud as well, right? The cloud is in green in color, highlighting the strong bullish momentum. And the first major support beyond the pivot, right? Remember the pivot is a pullback support, and the next support that we can identify for gold, right? We can probably use Fibonacci retracement to help us identify the next support level, right? We're starting a retracement from here. This low on 7th of June, going up to the intraday all-time high on 26th of September. Let's take a look at all the fibs. We can see that 38.2%, the 38.2% retracement level aligns pretty well with the pivot. Actually, now when I look at the 23.6%, right, actually I see another nice pullback level here as well. We can see that on 13th of September till 19th of September, $2,586 function as a resistance for spot gold prices before finally breaking higher. So in fact, this is actually a nice pullback level, which we can use in the identification of the pivot, right? And it also has the presence of a 23.6% Fibonacci retracement, and the first support can then be identified at the 38.2% as well, which is another pullback support level here at $2,531. So let's just keep 23 and 38.2%. I can get rid of the others. So now let's just zoom in a little bit. Right, so you can see here the pivot level at 2,586 is a pullback support level. So this was previously a resistance in mid-September, and after breaking above this level, this resistance can now potentially function as a pullback support, which has been identified as the pivot, which also has the presence of a 23.6% Fibonacci retracement. A little bit below, at $2,531, is another pullback support that also has the presence of a 38.2% Fibonacci retracement as well. So should we see gold prices pull back towards the pivot and stabilize here, it may give us a better opportunity to go long on this precious metal, right? We have a good opportunity to go long at around the pivot, because we can expect gold prices to continue to climb higher, especially of course if the labor data market cools even further, putting more downward pressure on the dollar, and then that in turn is quite likely going to function as a strong tailwind for gold prices as well, right? I also see maybe there's a pretty decent channel as well, right? I think I can see a nice bullish channel as well. Yep, spot gold prices. A pretty decent bullish channel here as well. Right, we can see the upper trend line being tested a couple of times, and this instrument bouncing off the lower trend line a couple of times as well, right? So we see a nice, pretty good bullish channel. We also see spot gold prices continuing to trade above the Ichimoku cloud, all of which contribute to the identification of strong bullish momentum, right? So pivot here is a pullback support at 2,586. So should we see gold prices drop towards this level, we can identify a potential entry to ride the rebound. And of course, if you have gone short on gold as well, right? Perhaps if you've gone short on gold since last Friday, or even perhaps at today's open, right? Identifying your take profit target at around the pivot would be a suitable area to do so, right? Remember, the pivot is a strong support level that's accompanied by a 23.6% Fibonacci retracement. So any short gold traders out there, right? Identifying your potential take profit target at around this pivot here would be a suitable area to do so. And conversely, should gold stabilize around $2,586, it may help us identify a potential entry to ride the uptrend once more. Right, so these are the key levels for XEU USD. Right, this is the instrument that tracks spot gold futures. All right, now let's move on over to XTI USD. Right, crude prices have been under significant selling pressure since the beginning of July. Right, we see very clearly a strong downtrend that's marked by a series of higher lows and lower lows. And not only that, we've also seen very strong retracements to the upside as well, right? So from 6th of August till 12th of August, we saw XTI USD. So this is the instrument that tracks WTI crude oil futures, reversing from about $73.30 per barrel to rise as high as $80.50. Right, this is a nice 10% retracement up to the retracement to the upside, right? A nice counter trend rally of 10%. We see another nice counter trend rally taking place on 22nd of August till the 27th, right? A period of 3 to 4 trading days, right? XTI USD stabilizing around $73 per barrel to hit as high as $78.50, another $5 move, right? Probably another 8% move here as well. And also the third strong counter trend rally has taken place recently in mid-September, right, with XTI USD stabilizing around $66.50 per barrel to rise as high as $73.26. This is another $7 move, right, almost 11-12% move here as well. So not only is this commodity trading in a strong downtrend, right, we are seeing very strong counter trend rallies as well, right? We're seeing significant counter trend rallies, and the third one has just concluded last week as well on Tuesday, 24th of September. Now, with crude prices currently pulling back today as well, right? Initially, I was expecting crude prices to rise a little bit higher, but in fact, it's actually dropping lower. So actually, the first support now is going to be renamed as the pivot, right? It's going to be renamed as the pivot. And if you're short on the short on crude oil, right, identifying a potential take profit target at around the pivot, which is at $66.34 per barrel, right, is a suitable area to identify a potential take profit target for any short trades that you may have. Now, this pivot here at $72.31 is now going to be identified as the first resistance, right? And this first resistance is also accompanied by Fibonacci retracement at 50%. So we found this retracement by starting from here, this swing high on the 26th of August, going down to this swing low here on the 10th of September. We can see that this 50% retracement level aligns very well with an overlap resistance. So previously, $72.31 functioned as a nice swing low support in February of 2024, another swing low support at the beginning of June, and another two swing low supports in early August and at the end of August as well. So this was previously a very strong multi-swing low support, which then proceeded to function as resistance last week. So when it functions as resistance, it then creates a nice overlap level here. So this is an overlap resistance that has the presence of a 50% Fibonacci retracement, right? So that's the resistance. Pivot level is at $66.34. So we can expect crude prices to drop lower. And if it does, and if you've been short on crude oil today, right, identifying your take profit at around the pivot is a suitable area to do so. Right, this pivot level at $66.34 is actually a very significant support level as well. Right, we can see here it has functioned as strong support since March of 2023. Of course, we can see some wicks dropping well below this level, but generally, when you look at the body of the daily candles, right, you can see generally $66.30 has held up pretty well, especially here in 31st of May, 12th of June, and 28th of June of 2023, right? Three very significant multi-swing low bounces of this level here. And you can even argue that at the end of December, crude prices once again found support above this strong support level. And of course, very clearly, it found significant support 2 weeks ago on Tuesday and Wednesday, 10th and 11th of September. Right, so this is a very significant support level here. And should you be short on crude oil, right? Identifying a potential take profit target around the pivot would be a suitable area to do so. Right, beyond this pivot level, where's the next major support? Right, for that, you're going to zoom out even further. And what I see is a nice significant swing low taking place here in August of 2021. When you look at the market structure here, you can see XTI USD falling sharply from about $74 per barrel before stabilizing around $62.20 and staging a very strong rebound. So you can see it is a very strong swing low support, and a little bit before that as well in May of 2021, right, a couple of months before, you can see price finding stable support at this level once more. So this is like a very significant multi-swing low support, which we can use in identification of the first support for XTI USD. Right. So you can see here, pivot level is a multi swing low support that's been in place since March of 2023. This level, crude prices have bounced off this level as recently as 11 September, and should it fall towards this level once more, it's quite likely to stabilize around this level and before staging a minor rebound. Now, even for crude oil, right, I think there's a nice bearish channel that we can identify as well. I think we've got a pretty decent bearish channel that we should highlight. Right, you can see here, yep, pretty good bearish channel as well, right? You can see multiple touches uh, to the upper trend line of the channel and a couple of touches to the lower trend line as well, right? And of course, XTI USD continues to trade underneath the bearish Ichimoku cloud as well, highlighting the significant bearish momentum. But take note, we have seen we've seen three significant counter trend rallies, right, as large as 10%. The first of which took place in mid-September, mid-August. The second one taking place at the end of August, and of course the most recent one taking place in mid-September as well. So despite crude oil trading in a strong bearish momentum or trading within a bearish channel, we have already seen three very significant counter trend rallies. So do watch out for that. Do not get caught out unnecessarily, because we can see that crude prices can rise strongly as well due to a combination of geopolitical tensions in the Middle East and in Russia, Ukraine, and also any adjustments by OPEC Plus with regards to production quotas is definitely going to have a major impact on prices as well. Okay, so that's why crude prices have been very volatile, right? We're seeing global demand uh, get revised lower, right? Forecast for global demand gets revised lower, but at the same time, we're also seeing the ongoing geopolitical conflicts keep prices elevated, and any adjustments by OPEC Plus with regards to its production quotas is also going to have a huge impact on prices as well. So, in short, a very volatile period for crude prices, and that's definitely going to continue for the next few months, right? At least, of course, till the end of the year for sure. All right, so these are the key levels for XDI USD. Right, okay, so now with that, let's move on over to uh, the indices. Okay, right, let's move on over to US 30. Sorry, we'll cover DE40 first. DE40 is the instrument that tracks the DAX futures. Right, so you can see here, this was the new intraday high that was formed uh, by DE40 on Friday, 27th of September. This new intraday high at 19,493. This level was tested once more again today, but it looks to have retreated away from it today. However, the momentum for DE40 is still to the upside, right? We see very strong bullish momentum, and perhaps this instrument could rise up towards the pivot level here at 19,736. Remember, this is the new intraday high that was formed on Friday, 27th of September. So when uh, this instrument is trading close to its all-time high, right, we have to rely on Fibonacci tools to help us identify the next resistance areas. So in this case, the pivot is a resistance level that has been identified by two Fibonacci projections. We have a Fibonacci projection at 61.8% and a Fibonacci projection at 78.6%. So this is a Fibonacci confluence. And then the first resistance, which is the next resistance beyond the pivot, has been identified by 100% projection. So this 100% projection and 78.6% projection levels were found by starting from here. We started this projection from point 1, 5th of August, going up to point 2, 3rd of September, and ending at point 3, which is at 10th of September. So that's how we found this 78.6% and 100% projection levels. Now, this 61.8% projection level was found from a larger move here, right? We started point 1 from this swing low on 27th of October 2023, going up to this swing high here on 16th of May 2024, and ending with a swing low on 5th of August. So you can see the 61.8% projection level aligns very well with the 78.6% projection level, creating a Fibonacci confluence. It is a strong resistance barrier or zone that has been identified by two different projection levels, which has been identified as the pivot. Right, so the intraday all-time high has been formed at 19,493. So if we do see DE40 push on higher, right, if we do see it push on higher, identifying a potential take profit target at around the pivot is a suitable area to do so, right? So if you take note any further bullish momentum, right, for this instrument, we can then use the pivot as a potential take profit target for this currency, for this instrument. Now, looking at the first support is a nice pullback level here at 18,948. We can see that, of course, a nice swing high resistance taking place here on 2nd of September. We also see DE14 running the resistance on 20th of September, and then again on 25th of September as well, right? So this is a nice pullback resistance level. This was previously a nice pullback resistance level, which can now potentially function as a pullback support. So that's how first support at 18,948 has been identified. Now I think there may be even a nice bullish channel for DE40, right? Let's give it a shot. Maybe yes, I think, yeah, I'm quite inclined to use this bullish channel as well, right? Still see a few touches to the bottom, a couple of touches to the top, right? So at least gives us a good uh, indication of how strong this current bullish momentum is as well, right? And of course, this instrument continues to trade above the bullish Ichimoku cloud as well, right? So these are the key levels for DE40, right? New intraday high was formed last Friday at 19,493. First major support is a pullback support level at 18,948, and of course if we do see this currency this instrument drive higher, identifying a potential take profit target at around the pivot is a good area to do so. Now with DE40 pulling back from Friday and today as well, I think we can use a Fibonacci retracement as well, starting from this swing low on 10th of September, going up to the intraday high on the 27th. We can see that the first support also has the presence of a 38.2% Fibonacci retracement. Alright, so these are the key levels for DE40. This is the instrument that tracks the DAX futures. Alright, now let's move on over to US 500. US 500, of course, is the instrument that tracks the S&P 500 futures. And similar to the DAX as well, this made a new intraday all-time high, but instead this was made on Thursday rather than Friday at 5,773. Right. So with this instrument trading close to its intraday all-time high, right, we've once again relied on Fibonacci tools to highlight potential resistance barriers. So the pivot is actually a resistance level that has been identified by a Fibonacci projection at 78.6% and a Fibonacci extension at 137%. And the next resistance level beyond the pivot has been identified by 100% Fibonacci projection, and that's at 5,953. So should we see US 500 continue to push higher, right, especially if it breaks above its most recent intraday all-time high, identifying your potential take profit target at around the pivot is a suitable area to do so, right? So the first potential take profit target for US 500 can be identified at this Fibonacci confluence that has been identified as the pivot at 5,832. Right, looking at the support side, right, you can see US 500 making a nice swing high resistance here on in mid-July of this year, running the resistance once more at the beginning of September. So what was previously a strong resistance level can now potentially function as support as well. So the first support at 5,669 is a nice pullback support level for US 500. Right, so how do we find these projection levels and extension levels? So let's start with the extension level as well. So to find extension levels, we run Fibonacci retracement. So this retracement began from here, this swing high on the 16th of July, ending with the swing low on the 5th of August. We can see that the 127% extension level, which is at 5,832, aligns very well with the 78.6% projection level. Now, this projection level was found by starting from point 1 on 5th of August, going up to point 2 on the 3rd of September, and ending at point 3 which is on 6th of September. So that gives us 78.6% and 100% projection levels. Right, so take note, we're seeing very strong bullish momentum for US 500, and if it does manage to break above this intraday all-time high, right, it's quite likely going to aim for the pivot level here, so you can identify a potential price target at around this Fibonacci confluence or the pivot here. And of course, first support is at 5,669, which is a nice pullback support level. Right, okay, let's see if there's anything else for US 500. Nope. Okay, if not, then let's take a look at the euro, right? Let's take a look at the euro. And of course, should you have any requests for any other currency pairs or any other instruments, do let me know in the chat box, right? I'll be more than happy to go through the analysis with you. Right, looking at the euro as well, it's been in a very strong uptrend, of course, since the end of June, right? As is what is expected. If the dollar index is trading within a strong bearish channel, we can expect the euro to be trading within a strong bullish channel as well, and we can we can identify one very easily as well. So let's start off by identifying the bullish channel here. Right, it's pretty clear. Maybe is it okay? No, wait, hang on. This one is going to involve these 2 points here. Yep. Right. Okay. Not the best, or rather not the most perfect bullish channel, right? Not a perfect bullish channel, but you guys can I'm sure you guys are able to identify this very strong upward momentum as well, right? You can see two very significant two strong touches to the lower channel of the bullish lower bound of the bullish channel, and of course a few touches here on the upside as well, right? Similar market structure, rather inverse market structure to the dollar index. Now, of course, with the euro running the resistance here at the end of August at around 1.1200, right? This is a strong resistance barrier that has been in place since 23rd of August. So for nearly 4 weeks, 4 to 5 weeks, this is a strong resistance barrier that has that has kept prices in check. So this is where the pivot is going to be identified for the euro. So we have a potential bullish breakout, right? We have a potential bullish breakout scenario for the euro, right? This has been a strong resistance barrier, and should the dollar weaken even further this week, we may have a potential bullish breakout opportunity here. So if this bullish breakout does occur, the next resistance for the euro is going to be this swing high here that has taken place on 14th of July 2023, and that's at 1.1245. As you can see here, this is a pretty strong resistance barrier for the euro beyond the pivot. Remember, the pivot itself is a resistance barrier as well, right? And we may have a potential bullish breakout through this pivot level, especially if, of course, if the dollar weakens as well, right? We have a very strong potential bearish catalyst for the dollar for this week, right? We've got ADP employment report, JOLTS jobs data, and of course non-farm payrolls and the unemployment rate. So maybe this bullish breakout could likely materialize in the second half of the week, right? So maybe in the first half of the week we may see the euro pull back, right? So in the first half of the week, take note, we may see the euro actually pull back first, right? Especially we've got CPI data out of the EU, flash CPI data out of the EU tomorrow, and if inflationary pressures continue to dissipate further, that's quite likely going to cause that's going to cause the euro to pull back a little bit, right? But in the second half of the week, should we see US jobs data deteriorate even further, then that's going to function as a tailwind for the euro, and then we may see that bullish breakout take place. So take note for the euro as well, we've got two fundamental drivers for this currency pair, right? The first of which is flash CPI data that's out tomorrow, and should we see CPI continue to trend lower, that could cause the euro to pull back. So that's quite likely going to happen in the first half of the week. And as we head over into the second half of the week with ADP and non-farm payrolls, we may have a potential bullish breakout opportunity. So take note of how the respective data is quite likely going to drive the direction for the euro. It looks to be a tale of two stories for the euro, right? In the first half of the week, maybe a slight pullback, and in the second half of the week, if the data US jobs data continues to deteriorate further, quite likely to see this currency pair climb even higher and potentially reach its first resistance at 1.1244, which is a swing high resistance that has taken place in July of 2023. Right, then what about support? I see actually a nice overlap support level here at 1.1110. And we can see previously this level functioned as resistance here on 5th of September, after which it proceeded to function as support on 17th and 18th of September, and then again on the 23rd of September as well, and of course on 24th. So this creates a nice overlap level that we can use in the identification of the first support at 1.1110. Right. We can also run a Fibonacci retracement from this swing low on 11th of September going up to this high on the 25th. I believe there's a 50% retracement that should align very well with the first support. Yep, there we go. That's pretty good as well. Okay, so these are the key levels for the euro to watch out for, and take note on how the CPI data out of the EU could likely cause the euro to pull back in the first half of this week, and then we may have ADP and non-farm payrolls push the euro higher as well. All right, so these are the key levels for the euro. Right, okay, then before I move on to anything else, is there anything from the audience, right? Would you guys like to take a look at any particular currency pair that you're looking at, or maybe any of the other indices, right? If not, if there's no request, then I'll just move on over to dollar yen, right? And before that, I'm just going to launch a poll as well. Truly appreciate it if you guys could give your feedback with regards to today's webinar. All right, okay, so let's move on to dollar yen, right? Dollar yen, when it has also, uh, after making a high, running or climbing above 161, almost hitting 162 at the beginning of July, has reversed very sharply, dropping as low as 139.70 in mid-September, right? So this significant reversal has can be attributed to several things, one of which was intervention measures by the Bank of Japan in mid-July and end July to mid to end July. There strong intervention measures by the Bank of Japan to strengthen the Japanese yen, which in turn, of course, is going to cause the dollar yen and all other yen crosses to pull back very sharply. Then on 31st of July, Wednesday, the Bank of Japan had its central bank meeting where they raised interest rates and also planned a bond tapering program as well, all of which further contributed to the strength or the appreciation of the Japanese yen, which of course is going to cause dollar yen to drop even lower, right? So we've seen that take place since mid-July, and we've seen the demand for the yen pick up significantly since mid-July. So remember, higher demand for the yen is going to cause dollar yen and the other yen crosses to be under pressure and to pull back. Now, after falling sharply last Friday, right, I think Japan has a new incoming prime minister, right, and he's supposedly more on the hawkish side of things. So I think he's going to be looking to maybe move ahead with the second rate cut sooner rather than later, and that was part of the reason why demand for the yen picked up very strongly last Friday, causing dollar yen to reverse from 146.49, right, dropping as low as about 142, right, very sharp reversal last Friday because of this political news that was released. Now, dollar yen seems to have stabilized today at around 142.60, right? It seems to be stabilized around here. However, this currency pair is still trading in a pretty strong downtrend, of course, as highlighted by the bearish Ichimoku cloud, and also by as highlighted by this descending trend line as well, right? We have a pretty decent descending trend line as well, which emphasizes the current downtrend. So perhaps dollar yen is quite likely going to drift lower this week as well, right? So if it does drift lower this week, right, I see a nice swing low support here that's taken place in mid-September at 140.28. This is a level which we can identify as the pivot, right? So the pivot is a nice swing low support level at 140.28. swing low support has taken place on 16th of September, and actually if you stretch it all the way back here, you can see this is a very significant multi-swing low support for dollar yen, right? It first found support here on 28th of December 2023 and staged a very strong reversal. It once again found good support here, stabilizing on 16th September and staging a nice retracement to the upside, right? So you can see 140.25 is a very significant multi-swing low support level, which has been used in identification of the pivot. So if you do see dollar yen slide lower, you can use this pivot level to identify a potential price target for any short trades that you may have. Now, what about another support level beyond this multi-swing low at 140.25? Right, I see another nice swing low level here taking place in mid-July of 2023 at 137.84. So this is where we can identify the next support level. And actually, if I stretch it all the way back to March of 2023, this is actually a very nice overlap support level that we are going to label as the first support here. Right, so you can see we're looking for significant resistances and supports or price reaction of a certain level, right? Significant price reactions of a certain level, and using them to identify potential supports or resistances. Now, very clearly, this is going to be a major resistance for dollar yen, right? So around this level here at 144.80 is where the first resistance sits. Right, I think we can also run a nice Fibonacci retracement starting from this swing high on the 3rd of July, going down to the swing low here on the 16th of September. Let's pull up all the fibs. And we can see that the first resistance also has a presence of a 33.6% retracement. Of course, this wick here on last Friday goes spikes as high as 146.40, but generally you can see that this area here, the intersection of the descending trend line and the 23.6% retracement, identifies a pretty strong resistance area. And of course, the Ichimoku cloud itself can function as a strong resistance zone as well. So let's just keep 23.6% for now. All right, I'm going to end the poll as well. All right, thanks everyone for those who have voted. Truly appreciate it. All right, then let's continue with dollar yen. Right, so although dollar yen looks to be stabilizing today, right, any further or any renewed demand for the yen is going to cause, quite likely going to cause dollar yen to drift lower towards the pivot level here at 140.25, which can be used as a potential take profit target as well if you're short dollar yen. Now, because it's sort of like in limbo, there's no clear direction, right? If you, and for example, if you've gone long on dollar yen today, right, then identifying a take profit target at around the first resistance, which is at 144.86, is a suitable area to do so. Remember, you've got the descending trend line, the 33.6% Fibonacci retracement, and also this price action here on Thursday, 26th of September, all highlighting a major resistance zone. Right, so take note for now, there's no clear direction for the dollar yen, right? It's just sort of like in limbo, right? So literally, maybe we'll get more clarity by tomorrow, right? So these are key levels for dollar yen to watch out for today on the daily time frame, or perhaps for the next few days as well. All right, then let's take a look at we've covered crude oil, we've covered gold, we've covered the indices. All right, okay, maybe let's take a look at the Aussie as well, right? So looking at the Aussie, right, the first support was actually previously a very significant multi-swing high resistance, right? We can see this level at 68.59, sorry, 68.95, right? Or pretty much 69 cents. Previously functioned as a strong multi-swing high resistance on 15th of June 2023, 14th of July 2023, and even here we can argue that on 28th of December, this level once again functioned as strong resistance. Now, this level finally got taken out today, right? It made a brief attempt last Friday, but today we see a clean break above what was a prior multi-swing high resistance. So what was a prior multi-swing high resistance is now quite likely going to function as a pullback support. So that's how what we've labeled as the first support at 68.95. Now pivot at 69.83 has been identified by this overlap level here. This is an overlap level that previously functioned as support on 31st of January 2023 and then proceeded to function as resistance in mid-Feb 2023. So this creates a nice overlap level that also has the presence of a 78.6% Fibonacci projection. This projection level was found by starting from here, point 1 starting on 5th of August, going up to point 2 on the 29th of August, and ending at point 3, which is on 11th of September. Right, so you can see here, we've used the Fibonacci projection to add further significance to the strength of this resistance here. Right, so take note if you're long on the Aussie, right? If you're long on the Aussie, especially after making this nice bullish breakout today, right? Identifying a potential take profit target at around the pivot, which is at 69.83, is a suitable area to do so. Now, beyond this overlap resistance, the next major resistance for the Aussie comes in at around 71.36. This is once again another significant multi-swing high resistance, the first of which took place on August of 2022. Then you can see like a double top here, first on 26th of Jan 2023, and then again on 2nd of February 2023 as well. So this is a very significant multi-swing high resistance, which we're labeling as the first resistance here. So that's at 71.36. So for now, right, there's strong bullish momentum for the Aussie. We see trading in a nice bullish channel, and it has just made a bullish break above what was a prior multi-swing high resistance. So there's a potential bullish breakout in progress. And I think of course, if the dollar continues to weaken, right, the Aussie looks set to climb towards this pivot level at 69.83, which can be used as a potential take profit target. And remember, this resistance level also has the presence of a 78.6% Fibonacci projection. All right, let's see if there's anything else. And maybe just out of curiosity, let's just see where the 100% sits. I don't think it sits close to the, no, it sits quite away from the first resistance, so that's fine. Let's not force the Fibonacci projections onto the analysis. And as useful as Fibonacci projections are, right, do not force it into the analysis, especially if it doesn't align very well with significant resistances like this, right? You can see the three significant multi-swing highs taking place. And of course, if the 100% projection aligned a little bit closer to this level, then of course I would have used it. But since it didn't, that's fine as well. Remember, never force a Fibonacci level, whether it's a retracement, projection, or extension into the analysis, especially if it doesn't align with any prior identified major resistances or major supports, right? What we're looking for is the Fibonacci levels to complement the resistances and supports that we had identified previously or ahead. Okay, so these are the key levels for the Aussie. Let me see if there's anything else to cover. Right, if there's no request, then maybe let's take a look at cable as well, right? Let's take a look at cable, right? Very similar market structure to the euro as well, of course, in a strong bullish channel. Strong pullback here taking place in mid-September, right? We see that as well. And of course, a pretty decent bullish channel as well. So even the cable broke out of a prior swing high resistance here on 27th of August. So this can be used as the first support. This is a nice pullback support level at 1.3266. The next resistance here is possibly just going to be this level here as well, right? This is a nice resistance barrier at 1.3415, which can be identified as the pivot. And here, similar to the euro, we may have a potential bullish breakout opportunity for the cable here. And beyond this pivot, where's the next resistance? We're going to have to zoom out pretty far and have to come back all the way to probably this, is it here, 134.40, maybe here, maybe this level here is going to be the next resistance barrier. Let me see, how does it look? Is it a bit too close? Oh, actually the pivot, this is actually a very good level to identify the pivot here, right? So it's actually like an this is actually like a strong pullback resistance here that's been in place since February 2022, right? So you can see here from 25th of February till 3rd of March 2022, cable failed to break above this level, so this level functioned as strong resistance back then, and it looks to be functioning as resistance once more, right? It's a very significant resistance barrier, but we may have a potential bullish breakout opportunity here, right? Remember, with dollar looking very weak, quite likely we can see this level give way at some point this week, maybe especially towards the second half of the week. And beyond this level, the next resistance for cable is going to come in here. There's another nice resistance barrier here at 1.3627 that has been in place since 3rd of February 2022 till the 22nd here. So this is how we've identified the first resistance as well. Right, over here we can also try and use Fibonacci projections to try and complement these resistance levels. So let's start a projection from here, 0.1, 8th of August, going up to 0.2, 27th of August, and ending at 0.3, which is on 11th of September. Let's look at all the projection levels. Right, 61.8% has been surpassed, so that's fine. 78.6% is in no man's land, but 100% sits pretty close to the first resistance. So let's just keep 100%. So you can see here how we're actually using the Fibonacci projection levels to complement the resistances and not the other way around, right? So yeah, 61 and 78.6 are not valid. 61 is not valid because price has already exceeded this level, and 78.6% is in no man's land, so we don't really need that as well. Right, so strong resistance barrier here identified by the 100% projection. In this uptrend here from mid-September till last Thursday, right, we can also run a Fibonacci retracement here on this nice uptrend, 11th of September till 26th of September. There may be a 38.2% that we can use. Let's see. Yep, 38.2% sits very well with 1.3266, so that's great. Let's keep that on. All right, so these are the key levels for the cable as well. And we could see this currency pair climb higher along with the euro this week. All right, so that's all I've got for today, right? Thanks everyone for tuning in to today's webinar brought to you by IC Markets. And before we sign off as well, take note, it's a pretty heavy calendar once more, right? There's quite a few things going on, but I want to bring your attention to the flash CPI data that's out tomorrow, Tuesday, 1st of October. We've also got ADP employment report on Wednesday, 2nd of October. And finally, the highly anticipated non-farm payrolls and unemployment rate will be dropped by the BLS on Friday, 4th of October. Right, so this is the calendar for this week, right? So head on over to Forex Factory where you can find out more about each specific data point that's going to be released this week. And take note, we are expecting inflation in the EU to dissipate even further. So this is quite likely going to function as a bearish catalyst for the euro. So that's why I said in the first half of the week, maybe we're going to see the currency pair, the euro, come under a little bit of pressure. And then should ADP and non-farm payrolls continue to show further deterioration in the US labor market, then all that could reverse and cause the euro to reverse and climb higher. Remember, further deterioration in the ADP reports, in the ADP and BLS reports are likely going to cause the dollar to sell off hard. And that means, of course, currency pairs like the euro, cable, Aussie and Kiwi are all likely to rise. And we can also expect gold prices to rise strongly as well. All right. Great, so that's all I've got for today, right? Thanks for tuning in to today's session brought to you by IC Markets. Do look out for all upcoming webinars for the rest of this week, right? We've got a combination of educational topics as well as live analysis. All right, take care, have a great trading week, and I'll catch you all in the next session.